Those jobs numbers looked a little, yeesh. Do we believe them? All the shitty data we've been getting lately, or the late data?
If you follow the household survey, it's been shitty for 6-9 months now.
Exactly. Whistling past the graveyard. At
I
least the
think
equity
don't get started on what's wrong with the establishment survey and the procedures.
And if you could tell me how you use a jobs market number to make money in stocks, let me know, because I think it's ridiculous. I think we spilled way too much ink on this.
Well, if I had today's number yesterday, I'd have a big short on. Let's put it that way.
Yeah, right.
Yeah, economists can't pick stocks. I've always said it. I still say it.
For one day, I would have made some money, but yeah, it's not easy.
All right, sorry we're late, everybody. I had the Amazon gremlin from yesterday found my computer, and we had a hard time getting me launched here. So we're back, we're up. Welcome to Wall Street Beats. I'm Steve Lamar. I'm joined by our technicals and momentum pro, Kevin Bakes Baker, and our small cap value and growth pro, Robert Marson, who's opening the pool next week. So that must mean the weather's starting to change in the right direction for everybody back there in the East Coast. So hope you guys get some warm weather here soon. Mr. Marson, what are you looking at this morning? We're going to talk some of these stocks I own that are underwater, or we're going to talk about a new one?
A couple of trades. As I mentioned last show, I was looking to sell more than buy, and Bakesy's favorite pick of mine, because it actually had a good chart when I bought it at 15. TATT Technologies has been mostly sold. It's about $60 today. It's a year and a half old trade. It's 4 times revenues and 35 times earnings. And in general, small cap aerospace has been on a massive run. And that chart looks great. I sell good charts for the most part. I buy bad charts for the most part. Every once in a while, I find a good chart because it's been so bad so long. The base and little knife. That's the kind of chart this was when I bought it at 15. And 4x in 18 months is a pretty good win, and it's probably 90% gone from the long portfolio today. It was a nice position.
So you're taking it off, like.
Yeah, I'm down to the tag end position right now. Yes, sir. Less than it's about a 1% position. It started at 4 and went to 10. So yeah, it's been sold quite a bit.
All right,
I'm declaring victory on Intest in a very short run. INTT, not victory is for selling, but the purchase comments were started in the 6 range on this show about 10 months ago, maybe 10. I think it was April, May, and I did a starter position in, filled it in at 8.5 from Steamboat Springs a month and a half ago. And now that hit 13. So my basis is 7. It's nice having a 70%, 80% win in a year to sort of prevent me from screwing this up totally. But I would not sell this and have not sold a share. In fact, on any dips, I would buy more because it's still a very cheap. As long as the dip in the stock were not created by an imploding fundamental background, which I don't think is going to happen. But with this war and the economy and the implosion in private credit and who knows what going on with CapEx spending for data centers, now that NVIDIA has told OpenAI they get 30 billion in tranches and no 100 billion, and people are starting to pull back from data center build outs and stuff. There's still a big fundamental kick to the economy for building out data centers. But I think we might have reached, data center leverage peak
Yeah.
sentiment. And I think, we all know the sentiment peaks way before the fundamentals in these secular growth themes. Um, Someone mentioned a story about that happened with the railroad stocks or the electricity stocks back in the 20s, where they peaked like, the build out was 5 years afterwards, and the stocks peaked 5 years before the peak fundamentals from the build out of the companies. So I don't know if this is, I think the fact that there's lots of delays in this is interesting as a buying opportunity when they get hit. Now they've gone to 4 and 5 times revenues, and Robert doesn't buy 5 times revenues ever. I buy 1.5, 2.5. I sell at 4, 5, and 6, and they go to 8.
I think you bought Nvidia once just as an FU trade.
I did. I sold it at 190. I bought it at 120, sold it at 190 ish, I think, give or take.
So Biggs, tell us where's the buy if you want to buy this in test on dips. Where do you want to be buying it on the chart? What does the chart say? Is
this in test we're talking about? INTT?
Yeah.
I mean, here's Robert's buy roughly around here, April, May. I think that's great. Would I bought it? No, because it's it was mired here for a while.
Chart,
but I'm just impressed by. I sound like a broken record, but when stocks react well to earnings, that's a positive. And when stocks shrug or go down on earnings, that's a negative. I think almost unabashedly so. But what I like is the volume pickup. I mean, this looks like it's 4 or 5 times. This is the weekly chart that I have here. And we took out this level here on the earnings report, which is great. And I think this is a likely place to stop up here at 1435 or so, which is the 2024 peak. But my mantra. You sell half. I would not. You guys do what you want to do. You have a double, sell half, let the winners run, because this is reversing. This is a long term trend that I think could take you back up to this 27 level at some point, given the volume that we're seeing and the relative strength. So
Okay.
I wouldn't buy it here. I'd like to buy it within 5% of this 1088 number now that I'm back at the daily.
So roughly 11. Roughly 11 is when you start looking at it.
Under 12 at least. Under 12. And
Okay.
if you don't get it, you don't get it. I mean, that's just the way the world works. But
Right.
you know how many charts look like this right now in this tape? About 11, and he's got one of them.
Yep.
Right.
So Bob, refresh for those that are new. We've got a lot of new viewers on the platform right now. Can you refresh everybody just real quick what these guys do?
They make. They're a little miniature $130 million revenue and market cap industrial conglomerate manufacturing testing equipment. So they test. They make machines that test circuit boards, that test batteries, that test semiconductors. They also have products that create heat and cold extreme levels, so you could test your chips and your batteries and your boards in these extreme temperature um, environments. And so it's a testing and measurement company. We call it T&M in the old days. And it got very, very cheap because, as I said on the last show, and you guys broadcast it today, or showed it today on Twitter, I guess. There was a boom bust cycle for analog semiconductors. They don't participate in the data center stuff because that's logic, that's memory and logic. They're digital semiconductors, and the cycle looks like it's turning after being a wicked down cycle in analog semiconductors, in capacity expansion 4 years ago, 3 years ago, in pricing and in inventory digestion. So the cycle's now recovering. TI is their biggest customer by far, and is starting to rebuild its or fill out its fabs that were delayed from the overcapacity. And Teradyne and other semiconductor companies, equipment companies like Cohu are also big customers. And all those stocks have rocketed in the last year. Some double, triple, some quadruple. One of their peers trades at 25 times trailing revenues. It's insane. And these guys were sitting at 0.65 EV to sales. So a year ago, I said, screw it. There's no reason to start buying it at 6 other than it's stupid, bleeping cheap. And that's where I got my starter position. And that led me to follow it seriously. And to, when I thought Cohu was half its price. Amtech Systems, another peer, was a third of the price a year ago. So those stocks have doubled and tripled. This has been a lagger until 13. Now you can say it's nearly doubled off the bottom. It's caught up to the peer group. That got me the first 75%. Now they have to execute. So they have a plan to make, I think they make over $1 next year. I think they make $2 in 2030. And if I end up holding this for 3 years and they make close to $2, not only will Bakesy's $27 price target be hit, but it'll probably go to a 3 handle on a $2 earnings number. So I don't know whether they're going to make $2. They missed this management team I like, but they didn't execute well in their first 3 to 4 year plan. They have a new 3 to 4 year plan. And if they do, I'll have an opportunity to sell 20, 25, 30, 35 in a year and a half because they'll look forward. So, yep.
All right. So we're selling TATS and we're buying InTest.
On the dips.
Go ahead.
Yes.
On the dips.
Robert, take a look at this. This is uncanny how this happens. This is the 2000 peak of InTest, INTT at 27. And then here's the peak again in 2023. And I can make a case. This is a pretty massive cup and handle that goes for a long, long time.
Right. So,
and if you see 27 plus, then to infinity and beyond. I'm obviously exaggerating, but you get the.
I might be selling early at 27 if I sell the next 28.
I don't think he's going to be sticking around long if it's 27, 30.
Well, I might. Bakesy's chart got me intrigued about holding a decent chunk at 28 if it closes above 27. So,
all right.
Especially if you're taking the initial investment off the table, it changes the psychology dramatically.
Well, at 28, I'll have to sell 1/4 of my shares, right? That'll be a quadruple to take my money.
Beautiful problem to have. I love it.
So, Marcin, I got to ask, I'm going to change the subject on you. So we've seen some volatility and some selling in the markets last week or so. Looks like we're starting to break some levels. We can talk about those with Bakes on the major indices. What's on do you have anything on your shopping list? If we see another, 2 to 5% down on the major indices, is there anything you're kind of scouting to buy, or any of the?
I have a couple of stocks
medium, big caps,
small caps that I'm circling, but I'm still a seller rather than a buyer. The average drawdown in a pre-election year is 20%. And excuse me, in a midterm election year is 19%. And I'm not buying a 5 or 6 or 7% dip. I shorted stocks a couple days ago and I sold stocks yesterday. Valuations are so extreme that things go from 7 times sales to 4.5 or 5 because they were part of a overbought, over momentum. I'm not interested in that crap. I don't do that. So I'm not like, you remember me pitching a company called PAL Industries. It was a play on electricity. It went from 200 to 150, right? And I called it a profit-taking panic. And it went to 550. So yeah, PAL goes 550 to 450. Do I think, I got a great buying opportunity? Bullshit. It was buying opportunity 150. I was an idiot for not buying the stock. Okay. So yeah, if stocks go down 70% in that theme, I'm interested. But that's where the value. I don't pay more than 2 times sales ever. Period. Stop. So if I have stocks that fit my names, you fit my screen, I'll buy. And InTest fit the name. And by the way, SimilarWeb fit the name at 1.5 times sales, and it went to 0.5 times sales. So I lost 2/3 of my money. Okay, it's starting to grind back, and I had made it a full investment at my price. I didn't make it a lottery ticket where I could have doubled or tripled it in dollar costing average could have tripled my position. So I'm stuck with a $6 basis and a $3 stock. So nothing else I can do. But I'm willing to buy things that fit my formula whenever I see them. And right now, there's just the valuations are so like I would have to see Belfuse, which I bought at 12, go to 100 to buy it, or 185, and it's hit 250. I'd have to see TAT go back to 30 to 40 before I buy it from 60. So
Got it. Okay.
not a lot to buy under.
Hey, Bakes, I know how to push his buttons. I got him riled up there. And I'm with you on.
I like the fact that he stopped referring to himself in the third person and started swearing, making his mom leave the show. So,
and there's always Crocs and Abercrombie, those pieces of poop that I could buy a 1% position if I'm itching to buy something.
All right.
But I do like this. Marcin has a discipline. Most investors don't have a discipline. I know exactly what I'm doing every single day. And I make mistakes, but I make small mistakes and I let my winners run. And Marcin does the same thing, which is, I think, invaluable. After 30 plus years of doing this, you say, okay, I've touched that stove. I'm going to stop touching the stove. And you learn how to, manage risk and take losses and what have you. So, I couldn't.
Everybody on this show who's been following Marcin's picks have made a lot of money. Yep. I mean, a lot.
Bingo.
He's got some
Couldn't agree more. Couldn't agree more.
And the stuff he buys, the charts when he buys them often look like shit. But when he's right, you got to, between the 2 and 10 bag around.
Yeah. I'm not shooting for 50% trades that have already worked. I'm shooting for home runs, but don't be strikeouts. And I've had a few this year. I've had 2 big ones.
And you got to be patient. This isn't a, overnight you're going to have a double.
And more often than not, I sell before I realize I made a big mistake. But in the case of the Sassacre, you didn't have a chance to get out if you realized you were making a mistake. You were down 50% before you realized it was a mistake. So after buying down 50%. So that's what
anything that's down 15 should get shot. 1.5. Anything down 1.5 from Cox, get rid of it. Period. Yeah. No one's going to do it.
I love buying down 70 or 80 if I'm right on the fundamentals, but that's painful. That's hard to do.
All right. So Bake says you have a sell stop at 15 down, and Marcin's a buyer at 80 down.
Yeah, I always look at 80 down. I can't stop myself with a good balance sheet, net cash, good products, and no imploding business.
Are you saying it's down 80 from your cost, or it's just down 80% in the market?
80 from a 2-year high. Yeah, not mine.
Okay, that's different. Okay, but a lot of people hold on to stocks and say, I'm right on the fundamentals, and they're down 15 and they hold it, and they're down 25 and they hold it, they're down 50 and they hold it, and then they're down 80 and they hold it, and they're spending 80% of their time looking at their dogs.
Guys,
and
look,
I want to try to get our members to avoid that as much as humanly possible.
Absolutely. I've when I ran a $6 billion institutional low PE fund, if the PE went up the wrong way the day after I bought the stock, because I bought it the day before an earnings report, I sold the stock the next day. So I was pounding the table long buying, the next day I was pounding the table selling. Okay.
That makes you really popular at the Philadelphia Pipe Fitters annual meeting. So it's
the formula. You have to have a sell formula, Bakes, and that's what we do.
I applaud it, and it's more rare than people realize.
That's right. All right, Bakes, let's turn it over to you. What are you looking at today? I think you want to talk about some, speaking of some Sassacre stocks. I thought I saw Salesforce was on your list of stocks you want to
and this morning. I'm just struck by the fact, and the reason I highlighted this was that Benioff, the CEO, Mark Benioff, was on Fast Money, and he wasn't on Kramer on CNBC. And he usually goes and Kramer kisses the ring, no matter what the report is. And just for context, Salesforce has been an incinerator for money for 2+ years, and it was like Queen Gertrude, the CEO doth protest too much, methinks. And so I just say, okay, he's saying that, we have AI too, where I don't really know what he's saying, and I don't care what he's saying. I just know that he's going to have a hell of a time getting this stock above the 212 to 226 level anytime soon.
Yep.
And so I just caution people, oh, this was a great stock. Well, you know what? Everybody has their day, and I think their day is over. And that's why, when I hear, oh, well, now it's historically cheap, their business has gotten materially worse, period. And I know you could say, oh, well, it's not going to impact that much, and switching costs and what have you. I think this is going to be a dead cat bounce on some decent volume, to be fair, which gives me a little bit of pause. But 212 to 226, I think that's all you get out of Salesforce. And there's just there's so many other things to do. Why walk into this gin joint?
And
So,
when you start to see that too, Banks, I mean, he bought a lot of companies with stock. There's tons of employee-based stock comp at these
yep.
much higher levels. I mean, you're going to start seeing your best and brightest start looking for other opportunities when a lion's share of their comp is at 2x this price. And oh, by the way, they had to pay tax on it.
In California, largely. So, it's. I just
Nice food.
buy the dip and things have it's at this historically low valuation. There's hardly any growth here anymore. So I just there's so many things to do that we're finding, that Marston's finding, that you're finding, that you don't need to go exhume SaaS companies anytime soon. I guess that's my point.
Okay. All right. So
All
stay
right,
away.
a couple more, and then I want to hear about yours. I probably should have waited for Maris, but this is Lilly, and this is this is almost classic head and shoulders activity. The volume here is higher on the left shoulder. It evaporates here on the head, and then on the right shoulder at this 111.14, the down volume, the pink down volume here starts picking up, and it better hold.
That looks like a short. That looks like a awesome short.
Yeah, and that's why I'm saying it. And oh, by the way, it's been given nothing but good news from its competitor and itself about how they've won the GLP-1 war. And I guess my point is that's past tense. And what have you done for me lately? So we're at 976 right now. If we take out 965, this prior day low, I think you have follow through down to the 864 level. So if you've been in Lilly, you've made a ton. Look at this, a ton of money, but don't give it back. I think that 965 level is going to be a big problem.
All right, I'm going to ask Ben about the options on Lilly. See
Okay.
if they're not too expensive.
And then one last thing, and I should again, this is Charlie territory, but this is textbook as well. This is Wells Fargo. JP Morgan looks very similar. They don't have the cachet or the CEO that JP Morgan does, but this is a break of the 200-day on big volume and a feeble rally up into resistance and the 200-day, and then cascading lower. So I know Charlie's been bearish on banks for a while. I have too, but now we're getting increased confirmation that you guys have been
saying this for months. For the past, I think since the first of the year at least, you guys have been saying cautious of these big money center banks. And
yeah, and Charlie and Ben more than I, but now I'm saying, you're getting a renewed confirmation that there's problem in the banks with the 10-year at 410. Here's SEF, and I've been eyeing this. My problem with it is that it's in essence shorting Warren Buffett. Berkshire Hathaway is the number one name in the index that this shorts, but now it's starting to work. So you could stay tuned. I might be saying, hey, I just shorted the financials via SEF, which is not perfect. But the banks have some big problems, and there's other things to do. So stay tuned for what we're doing down the road.
All right. Can you show us? I added to my rocket yesterday and today.
Okay.
It's trading back to its September lows. I think the management team is probably one of the best in the business, which is why I like the stock. I don't like the chart here, obviously, but I think this is a reaction to what we're seeing with interest rates in the last month ish. So you're gonna, when interest rates start creeping up, their stock's gonna start creeping down. So it looks like it's got to find some support here, I guess, is what this chart is telling us.
Yeah, this is 1519 at the end of 2023. That's a horrible line, but you get the idea. And I don't like it, and this is, you can't be too precise with these. You can't go down to the penny, but I don't want it to spend too much time below this 1519 level. It's doing it today.
Yep.
The rates haven't done much. What are we at, 410 on the 10-year? I mean, it isn't, and mortgage rates are still pretty benign. Their combination with, I forget the company, sounds to me like they win under almost every environment. So I think this is going to be okay. I don't want to see it drift much lower from here. I don't want to see it test this 9 to 10 level. I have a hard time seeing that given the interest rate environment and what mortgages have done. I just think it's I'm concerned about oil, and all the armchair economists are saying, oil up, rates go up, mortgage rates go up and housing goes down. That could happen, or you could have, we just opened up the Straits of Hormuz, oil's down $10, and the whole narrative changes in an afternoon. So we'll see.
Yep. Well, Trump's talking tough this morning about no surrender. We're going all the way. So that, I'm sure between the jobs number and that probably didn't help the markets at the open this morning.
Yeah, it's a bear market in clerics.
Exactly. All right, boys, you want to wrap it up there? Give everybody their Friday.
Amen.
Guys,
have a great weekend. Thanks for joining us on Wall Street Beats. Follow us on wallstreetbeats.com. And Marcin, you got one closing thought?
Yeah, there's no volatility the next couple of days, so enjoy it.
Please sign up for a free trial.
We will do that. Yeah.
Sign up for a paid trial. You get me.
Yeah, you get Marcin. You get so many good calls, Mr. Marcin. And you too, Bakes.
Yeah, what am I doing? Chop liver? Come on now.
So many good ones.
See you, gang.
All right, bye,
thanks,
guys.
Jen.
We should be charging $5,000.